Good morning and welcome. We are at the start of another fresh week of trade, an exciting week of trade ahead of us, if I may call it. And of course, as always, Ankita is with me. Ankita, take us through what global markets have been up to, especially on Friday, as well as the last week through.
Good morning to you, Harsh, and good morning to everyone. Now, Friday markets, the US markets were a bit mixed, but the week closed on a rather negative note. The S&P 500 eked out a narrow gain in the Friday's session, but still had the worst week in nearly 2 months. The broad index was up just 0.2% in trade. The Nasdaq composite slipped 0.6%, more than 0.5% was down 0.5%. The Dow Jones Industrial Average advanced 169 points, was up more than 0.5% in trade. So rather mixed there. Now, despite the Dow's Friday gain, it still ended the week down 0.1%. The S&P 500 and Nasdaq composite lost 1% and 2.4% respectively in what was their worst week since December. And that was a roundup of the US markets. Let's look at the European markets. Now, European markets closed lower on Friday. The Pan-European Stock 600 index finished trading down 1%. Most of the sectors and major bourses closed in the red. The British GDP number that came out was unchanged in the final 3 months of 2022. And also the Bank of England had forecasted last week that Britain would enter a shallow but lengthy recession. Now, on the back of that, FTSE was down 0.3%, DAX was down 1.3%, and CAC was down 0.8% in trade. So that was the roundup of US and European markets. Harsh, take us through what is the crude looking like?
Well, Ankita, crude's at a very interesting inflection point. It in fact rose in trade on Friday. We did see that towards the end. And, essentially, why is it rising? Because of the largely positive commentary or the way in which it's interpreted. The commentary around the way the Federal Reserve as well as the Federal Reserve Chair is approaching inflation as well as rate cuts or rate hikes or maintaining the rate as is now. So that's really currently the key. They are trying to balance growth with inflation. They're trying to make sure that the soft landing happens, and those slightly less hawkish comments are aiding a crude oil. At least that was noticed on Friday. But the other piece that also played out was the crude oil ban on Russia, as well as Russia cutting down its crude production by 500,000 barrels a day. Now, that's a large chunk, and that's what will really put pressure on crude as well. So while crude rose a couple of percent up, but it was largely flat since, and that's where we are at the moment. We're looking at Brent at around $86 a barrel. We're looking at oil, WTI oil at $79 a barrel. But Ankita, I'll throw it back to you. Talk to us about what are the key events to watch in trade today?
Thank you for that, Harsh. Now, I'll quickly take you through the events that you need to keep an eye out on. We have the January CPI numbers coming out, the WPI numbers, and the trade balance numbers that will be coming out from India. While from the US markets, we have their January CPI, retail sales, January PPI, and initial job claims that will be coming out. A very important number to watch out for as far as the inflation is concerned, and of course, the path for Fed to raise their interest rates further. Now, from UK, we have the jobless claims, the CPI number also coming out from the UK. We have global earnings. We have Restaurant Brand International. We have Coca-Cola and Lenovo Group that will be reporting their Q3 earnings today.
Right, Ankita. Let's move straight to global news. Right, rescuers pulled out more survivors from the rubble nearly a week after one of the worst earthquakes to hit Turkey and Syria came through. Turkish authorities also sought to maintain order across the disaster zone and began legal action over building collapses. The toll looked set to worsen, with chances of finding survivors dimming further. This was Turkey's deadliest quake since 1939.
And the US has shot down another unidentified object over its territory in the fourth military operation of its kind this month. The incident raised further questions about the spate of high-altitude objects that have been shot down over North America this month. The incident and the tense exchanges in the aftermath ratcheted up tensions between Washington and Beijing.
Well, and sticking to China, China tightened risk management requirements on banks, requiring them to classify financial asset risks in a timely and prudent manner. From July the 1st, banks must classify assets into 5 categories, ranging from normal to loss. The rules may help commercial banks evaluate credit risks more accurately. They have until the end of 2025 to reclassify the existing financial assets.
And Google employees are criticizing CEO Sundar Pichai for the way the company handled the announcement this week of its ChatGPT competitor called Bard. Staffers took to the popular internal forum Memigen to express their thoughts on the Bard announcement. Alphabet shares tumbled more than 9% last week on concerns about ChatGPT's threat to Google's core search business.
Well, and Adidas shares slumped as the company warned of a potential impact on its profit after ending its partnership with rapper Kanye West last November. The firm's new boss said it could lose hundreds of millions of dollars this year if it decides not to sell its stock of Yeezy sneakers. The company cut ties with West after he posted anti-Semitic comments on social media. The announcement marks the company's 4th profit warning since July.
And New Zealand's national carrier cancelled dozens of flights with parts of the country bracing for Cyclone Gabrielle. This is just 2 weeks after a record-breaking storm swamped the nation's largest city and killed 4 people. Air New Zealand said it was cancelling all domestic flights to and from Auckland. The country's weather forecaster said it was expecting heavy rain, strong winds and large waves.
Well, but with that, let's give you a little bit of gyan. At Times Network, we are always looking to create investor awareness and make financial matters simpler for all of our viewers. Keeping up with our values, we present the second season of Nivesh Ke Funde. On this edition, we're discussing savings as well as investing, which are both important concepts for building of a sound financial foundation and building wealth. Take a look.
Hello and welcome to another edition of Nivesh Ke Funde. Today we will talk about something that is at the foundation of a person's personal finance journey.
That's right. We're going to look at the savings and investments and the different roles they play in a person's financial portfolio.
Let's start with savings. It's when we keep aside money for an emergency that we can have easy access to. So basically, savings has high liquidity.
Investing on one hand is using money to get some assets that we hope will grow in future, thus helping us grow our wealth.
Well, under the heading of investing, there are a number of different assets that a person can explore, which provide varying levels of returns along with different levels of risk involved as well.
Yes, so investors can pick and choose the investment options that are in line with their risk and reward appetite, and most importantly, their time horizons. So if someone wishes to invest for a short to medium term duration, they can invest in debt mutual funds, and someone who's looking to invest for a longer time horizon in a higher risk product with relatively higher returns expectation, they can invest in equity mutual funds.
And there are many options that would be suitable to persons' varying requirements. And the best part is that people can now invest as low as rupees 100 per month through different mutual funds.
Another point in managing your personal finances is that a person should be disciplined. Being disciplined with savings and investments is important. And through mutual funds, this discipline is made easy as a person just has to opt for a SIP or a systematic investment plan.
Absolutely, and with the SIP, an amount that is decided by the investor is invested at a time fixed by the investor in a mutual fund picked by the investor himself. So in this way, the investor gets full freedom to choose their investment journey as well.
That's all on this edition of Nivesh Ke Funde. Hope we've been able to explain the difference between savings and investments for you. Stay tuned for more such investment insights only on ET Now.
Well, those were investment advice only for you at ET Now. Now let's quickly slip into a short break. You don't go anywhere. There's lots more action coming up on the domestic front on the other side.
Good morning and welcome back. You're watching Market Cafe on ET Now. Let's quickly switch over to domestic news. Soon there will be standards that will help establish quality control for sectors like fire extinguishers, mobiles, and the word is out that the government is also looking to strengthen quality parameters for education and health sectors. My colleague Sameer Dixit spoke with Sanjeev Singh, who is a joint secretary at DPIIT, to understand what all the government is planning to do going forward. Listen in to a slice of that conversation.
QCOs means quality control orders. DPIT is at present working on 315 standards, on basis of which we plan to have 56 QCOs within near future.
So majorly it includes, if you want to name few products or the departments.
Basically, we are at present having QCOs for light engineering industries, consumer industries, paper and linoleum industries, cement industry.
Okay. In addition to this, if we talk about the roadmap for next 3 to 5 years, what is going to be the focus area where you think so that bringing in some policy reform changes or some steps could take the entire QCO framework more in a more strengthened manner?
QCO is a continuous process and ever evolving concept. We are having stakeholder consultation for each and every QCO where we are involving all the association, we are involving the major manufacturers, importers, exporters, and while dealing with them, we are getting new ideas also.
For the education or the health sector, that is also in your topmost priority list?
Education and health sector is in our top priority, but it is not being dealt with by DPIT as such.
Okay. And would also understand that inspection that is being done by the government officers, there has been many times allegations that either it is not being done in a transparent manner, or it has to be done in a more effective manner. So for that, any step or any direction that government is looking at?
Yeah, we take corruption allegation very seriously, and whenever we receive such complaints, we take effective measures. And apart from that, we are also including third-party inspections, and BIS has several schemes for inspection. In some of them, inspection is to be done by the third-party inspectors who are being regulated and watched over and monitored by BIS.
And well, in what could be the single largest order by any airline, Air India has sealed a jumbo deal for about 500 planes worth more than $100 billion at list prices. This comes as the airline seeks to reinvent itself after changing ownership. The deal is split equally between France's Airbus and rival plane maker Boeing. The order also reflects Air India's strategy to modernize its aging fleet and recapture a solid share of trips between India's large overseas diaspora.
Well, and the National Statistics Office, the NSO, has released India's factory output based on Index of Industrial Production, which is IIP data, whereby IIP has risen by 4.3% versus the 1% on a year-on-year basis. However, output has slowed down sequentially. Government has made an upward revision to the November growth print to 7.3% versus 7.1%. If you look at the indices of industrial production for mining, manufacturing and electricity, those have done quite well. Mining output has risen around 10% and power generation has increased by 10.5% in the month of December. Meanwhile, intermediate goods contracted by around 1/3%.
And well, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our values, we present the second season of Nivesh Ke Fande. And on this edition, we discuss India's economic growth and how that can benefit you. Listen in.
Hello and welcome to yet another edition of Nivesh Ke Fande. I'm Ajay Sharma. Now it's a well-known fact that India's economy is on a very strong growth trajectory.
Yes, Ajaya. In fact, India is considered the fastest growing emerging economy across the world.
But Kavita, how can the everyday Indian be a part of this growth story? And what are some of the avenues that they can explore?
Now, one of the relatively easier and simpler ways to do this is to invest through mutual funds.
Absolutely, mutual funds provide the investor an avenue to invest in multiple asset classes.
Yes, Ajaya. Through mutual funds, an investor can get access to equity of shares of the Indian stock market as well as global stock market.
Not just equity, they can invest in bonds and debt market and even invest in gold and silver through the mutual fund route.
Right. One more thing, Ajaya. By investing through mutual funds, a person can invest in small denomination and does not have to make large investments at one go.
Yes, this helps the investor continue their investment at regular intervals for a long duration of time. Additionally, when a person needs money, they can redeem the mutual funds unit worth the amount they require easily.
Absolutely. One does not have to sell the entire investment. Thus, one gets the benefits of liquidity and flexibility also.
So if you believe in India's growth story, make sure you're a part of it. And an easy way to do that is by investing in mutual funds.
And with that, that's all on this edition of Nivesh Ke Fun Day. Thank you for watching.
With that, we'll slip in a very short break. More, of course, on the other side. We'll go stock specific.
Welcome back. You're watching Market Cafe. Now, before we give you more stock-specific information, let's quickly go across to news for the hearing impaired.
बेंगलुरु के येलहंका एयरफोर्स स्टेशन में आज से शुरू होगा एरो इंडिया शो। प्रधानमंत्री नरेंद्र मोदी करेंगे उद्घाटन। इस साल शो की थीम है रनवे टू अ बिलियन अपॉर्चुनिटीज। राष्ट्रपति द्रौपदी मुर्मू का उत्तर प्रदेश दौरा। लखनऊ में बाबा साहब भीमराव अंबेडकर विश्वविद्यालय के दीक्षांत समारोह में होंगी शामिल। काशी विश्वनाथ मंदिर के दर्शन और गंगा आरती में भी लेंगे हिस्सा। त्रिपुरा विधानसभा चुनाव के लिए सभी सियासी दलों ने झोंकी ताकत। आज अगरतला में प्रधानमंत्री नरेंद्र मोदी करेंगे चुनावी रैली। 16 फरवरी को मतदान। G20 के डिजिटल इकोनॉमी वर्किंग ग्रुप की पहली बैठक आज से लखनऊ में। वहीं कृषि से जुड़े अहम विषयों पर चर्चा के लिए इंदौर में शुरू होगी G20 कृषि समूह की बैठक। संयुक्त राष्ट्र महासचिव ने रूस यूक्रेन संघर्ष पर जताई चिंता। कहा कम होती जा रही शांति की संभावनाएं। गंभीर गहन वैश्विक असर के कारण कई दर्द से गुजर रहे हैं लोग। आईसीसी महिला टी20 वर्ल्ड कप में रोमांचक जीत के साथ भारत ने किया आगाज। पाकिस्तान को 7 विकेट से दी मात। नाबाद अर्धशतकीय पारी खेलने वाली जेमिमा रॉड्रिगेज को चुना गया प्लेयर ऑफ द मैच। प्रधानमंत्री आज कर्नाटक के दौरे पर रहेंगे। प्रधानमंत्री बेंगलुरु के येलहंका स्थित वायु सेना स्टेशन पर 14वें एरो इंडिया 2023 का उद्घाटन करेंगे। एरो इंडिया 2023 की थीम रनवे टू अ बिलियन अपॉर्चुनिटीज है। प्रधानमंत्री की परिकल्पना मेक इन इंडिया मेक फॉर द वर्ल्ड के अनुरूप एरो इंडिया 2023 में स्वदेशी उपकरणों और जो टेक्नोलॉजीज हैं उन्हें दर्शाया जाएगा। कार्यक्रम के जरिए स्वदेशी एमएसएमई और स्टार्टअप का एकीकरण भी संभव होगा जो वैश्विक आपूर्ति श्रृंखला से संबंधित है। इसके जरिए विदेशी निवेश और इसके सहित सह विकास और सह उत्पादन के लिए साझेदारी भी आमंत्रित की जाएगी। एरो इंडिया 2023 में 80 से ज्यादा देश भाग ले पाएंगे। लगभग 30 देशों के मंत्री, वैश्विक और भारतीय 65 सीईओ भी एरो इंडिया का हिस्सा बनेंगे।
Well, yes, and Capco's player ABB reported its Q4 results, or rather Q3 results, and the company's profits surged 93% while the order book remained robust. We spoke to Sanjeev Sharma, who is the country head and managing director ABB. Let's listen into a slice of that conversation.
I think the last quarter, which is has been quite good in terms of orders as well as revenues and the profitability. But not only the last quarter, but the last whole year. If you see our growth numbers, they are quite good. We have grown our revenues by 24%. Our fresh orders are grown by 31%, and of course, it's also reflecting in our profitability. And we are also entering 2023 with good order backlog.
At the quarter, EBITDA grew by 97%, sales grew by 15%, which means margins expanded quite significantly. What do you think happened? You took price hikes which came in this quarter, and lower soft commodities did help the numbers?
Well, we have been experiencing on the supply side expansion due to expansion of the cost based on the inflation numbers we have. We are able to participate together with our customers on that increased cost pressure, and customers have been quite supportive. That's only that, but that neutralizes only the cost. I think what is playing well for us is not what we did in last quarter or last year. I think it's the portfolio, how we had developed in last 3 to 4 years, and how it is positioned in multiple market segments. And given the state of economy, I think many of the market segments are expanding. We have expanded in the new geographies. So it's an overall effect how the volume is passing through our books and our capacity utilization. So that's showing up in our profitability.
When I talk about order inflow, before till the 9 month, of course, it was a great number. But in Q4, it's down 11% on a quarter-on-quarter basis. Any particular slowdown you're seeing, or it's we should look at it on a yearly basis because it can be chunky and bulky in any particular quarter?
I would say we should look at it on a yearly basis, and yearly growth of 31% is quite robust and strong. We participate with 18 business model. That means we have 18 divisions plus 2 divisions which does the service business, focused on about 21 market segments. And there are different market segments which have the cyclical nature. So you will see that quarter on quarter some changes of the mix takes place. But at the same time, I think we are quite satisfied with how the overall 2022 fared for us.
So you mentioned about a lot of changes that you've done as far as your product mix, your capacity, your automation is concerned. Can you talk to us about, how would you look at the export opportunity change? You have 3 facilities in CY22, which you have indicated could do better in exports across countries. So what change is happening over there? How will it reflect over the next 5 years?
So I'll talk about exports, but I must say, as a multinational company present in India, manufacturing for last 75 years, our main focus is to help a domestic market to get the best of technology, be it in the robotics and automation, in the energy efficiency, process automation, and electrification. That's our core focus, and our core focus is Indian domestic market. Now, over a period of time, our operations have expanded quite well, and they are best in class when you compare with all our global operations. And now our global managers, the business managers, they are using Indian factories for other markets. And that's where we are seeing a fairly good expansion of export volumes in our books. But still, it is at about 13 to 15% range. And since the domestic market growth is stronger, so percentage-wise it will remain in that area, but though in the real terms it's growing.
And well, that was ABB's management on the quarter earnings for you. Now, we'll quickly slip into a short break, but before that, we'll take you through the interesting lineup on the market that's coming up. We have N. Kamakodi of City Union Bank on the earnings for City Union Bank. We have Dinsho Irani of Helios Capital on his take on the market. We have Ashish Bhandari of Thermax Group on the earnings with ET Now. We also have Rajesh Jejurikar of M&M on the quarter numbers for the company, and we have Jaideep Nandi of Bajaj Consumer Care on earnings with ET Now.
Hi, so we quickly take you through what's happening in Asian markets. Of course, Ankita did take us through what was happening in global markets. Let me quickly take you through Asia. Largely, excuse me, in the negative is where Asia is at the moment. We're looking at cuts across the board. As you can see, the Nikkei is down around 1.3%. The Hang Seng is also down around 0.4%. The Kospi down around 1% or thereabouts, and we're seeing the ASX 200 also in the red. The Shanghai is probably the only index in the Asian basket which is currently in the green, sitting up around 0.1% as we speak. The SGX Nifty itself down around 30 points, largely flat is where we're looking at the start at the moment, well below that 18,000 mark and well below the 17,800 or just above the 17,800 mark as well. So that's where we're currently looking at the SGX Nifty, largely on the and that's been the trajectory of global markets as well. That's what really Asia is tracking. Where US is concerned, we're looking at cuts across US futures. The Dow futures are down around 1/3%, so are the S&P 500 futures, the Nasdaq futures down around 0.5% or thereabouts. That's where we're looking at the open at the moment.
Well, thank you for that roundup, Harsh. So a negative start indicated for the Indian markets as well. Now we have Ashesha with us in the studio, who will give us a roundup of all the stocks that we need to keep out on. Now, the global markets are indicating towards a negative start, but Ashesha, tell us, what are the stocks that we can watch out for in today's trading session?
Hi, good morning. So Laurus Labs will be the first one in focus in today's trading session, and this is because company informed the exchanges that US FDA has completed inspection of their formulations facility. Remember, this inspection was conducted from the 6th of February to the 10th of February, and the company has been issued Form 483 with 2 observations, and they said that they will address the observations within the stipulated timeline. So on account of this observation that US FDA has issued, keep an eye out on Laurus Labs. Moving on to Glenmark Pharma, which reported its numbers over the weekend. Revenues for the quarter gone by saw an uptick of about 10% on a year-on-year basis. Meanwhile, margins stood at 17.9% versus 21.8% that the company reported same time last year, indicating a contraction of nearly 400 basis points on a year-on-year basis. Thermax order wing coming over here. The company has informed the exchanges that they've won orders worth 251 crore rupees to renovate and modernize ESPs for an Indian public sector power company. LIC and TVS Motors will also be in focus because LIC has gone ahead and trimmed its stake in TVS Motors from 5.4%. It has reduced its stake to 3.3% as a percentage of total paid up share capital of the company. So on account of that, keep an eye out on TVS Motors as well. Moving on to BEML there, the company has informed the exchanges that they've won orders worth 388 crores. Balkrishna Industries again in focus on the back of its numbers, where revenues for the quarter gone by stood at 2,166 crores, an uptick of a marginal 6% on a year-on-year basis. However, the bottom line has taken a knock this quarter. Net profit stood at 108 crores versus a profit of 340 crores that the company reported same time last year, indicating a decline of a whopping 69% on a year-on-year basis. Margins have also contracted this quarter. Company has reported margins at 12.4% versus 23% margins that the company had reported same time last year. So on account of earnings, keep an eye out on Balkrishna Industries as well.
Well, thanks so much for that lowdown, Ashesha. Let's quickly also look at Kotak, which is in focus. Of course, Kotak Mahindra Bank, which is in focus because it's acquired Sonata Finance, which is an NBFC. Cost of acquisition around 537 crore in cash. Valuation is around 12 times price to earnings, 1.7 times price to book. Kotak trades at 3.4 times, so it's definitely value accretive for Kotak, both from an earnings as well as book value standpoint. The portfolio of the NBFC largely across the board, they cover pretty much everything from utility finance to vehicle finance to home improvement loans that they disburse. Now, what does this acquisition do to Kotak? In terms of size, not really material. 1750 crore is the loan asset value against Kotak's 3 lakh crore asset base, and you're looking at branches which are around 450 branches, but the segment which they target, the unsecured segment is where Kotak really wants to grow, and the current branches of Kotak that cater to unsecured is around 500. So this really gives Kotak a springboard to drive growth in that segment. So really it's about expanding branches from 500 to 1000 and into regions which Kotak currently doesn't operate in, UP, Bihar, MP. So it gives them a little bit of leverage there. In terms of staff, around 2800 employees will be added to the Kotak employee base, and customers double up for Kotak. I'm talking about purely the unsecured customers from 7.5 lakhs currently to 15 lakhs. So they've added another 7.5 lakhs through this acquisition. In terms of PAT and ROA, the company has an ROA of around 1.2% as per the latest 9-month data, and profit after tax of around 17.5 crore. But this is of course definitely a positive, since even in the past when Kotak has taken up certain NBFCs, what they've tended to do over a 5-year tenure is really grow the book really well and in a really systematic manner. So of course wait and watch as to how this plays out, but at least a positive at the moment.
Well, thank you so much for that, Harsh. But now let's quickly go across to Vamakshi, who's waiting for us to give us all the brokerage information, all the brokerage notes that came out in the morning. Vamakshi, take us through what are the brokerages saying really?
Well, absolutely. Good morning to both of you all. Let's first start off with M&M. We have a note that has come in from JP Morgan, and they believe that the Q3 numbers were quite steady for the company. Auto plus farm segment EBIT was in line with their estimates, but the auto segment's margin particularly surprised on the positive side. They remain encouraged by M&M's consolidated ROE improvement, and in fact, they've left the FY24 and 25 estimates largely unchanged. So overall, JP Morgan is appearing to be quite positive on M&M, which is why they've gone ahead, given an overweight rating on this stock and a target price of 1,520 per share. Aurobindo Pharma will also be on our radar after Bank of America has come out with a note on the same. They're seeing that there is a positive traction in the US generics business, which is driving the beat that has come in on the earnings front. Growth drivers are expected to unfold in FY24 and 25, and specifically medium-term growth levers are expected to play out from the second half of FY24. So overall, Bank of America has maintained a buy rating on Aurobindo given a target price of 650 per share. And lastly, watch out for Info Edge. JP Morgan believes that the IT segment for the company is seeing a bit of a slowdown, but the margins are seeing improvement. Positive surprise did come in on the EBITDA margins front, and considering all these factors, JP Morgan has maintained its overweight rating on Info Edge given a target price of 5,300 per share.
Well, thanks for that roundup, Vamakshi. And the Tata group of companies are reaping the benefits of focus and scale with well-capitalized balance sheets and recording the highest ever growth and also funding growth through internal accruals and good cash flows. In a conversation with the Economic Times, chairman of Tata Sons said that the Tata Group's overall annual growth is expected to be roughly 20% this year. He added that Tata Motors as an entity will be debt-free by March of 2024, while JLR might need a few more quarters to become completely debt-free. He also spoke about the company's plans for making Air India the best in the business globally. Addressing the Tata Neu app, the chairman said that it got a lot of downloads upon its launch, and the user experience issues have been resolved in the last 6 months or so. Finally, he added that Tata Steel Board will take appropriate action to consider future plans in the UK.
And well, Vodafone Idea has started fresh talks with key lenders including State Bank of India, Punjab National Bank and HDFC Bank to refinance the 3,000 to 4,000 crore rupees worth of loans. Refinancing of some of this debt will help free up cash for Vodafone Idea, which urgently needs to pay substantial vendor dues. The company owes dues to tower companies like Indus Towers and network equipment makers such as Ericsson and Nokia.
Well, and Safir Anand, who's the strategist and investor, says that he likes new age tech companies and holds Paytm, Zomato as well as Nykaa. On the other hand, he holds two Adani Group stocks amid the current volatility around them in the market. Listen in to know more about what he thinks about these stocks.
For me, there are a lot of factors that have made me positive on new age companies, and the company that you're talking about is one such example, but there are others as well. The first factor that I see is that if first of all is valuation, which is the sacrosanct principle for investing. A lot of these companies, when they raised capital, they were at insane valuation. There was almost like you were in a frenzy to miss out if you did not participate, and everybody wanted to own these shares without understanding anything about them. And suddenly they discovered that there is a disconnect between the companies and the valuation, and then these all came tumbling down 60-70%. So that itself became a positive catalyst, because that is intrinsic in the principle of investing, that you will look at the price of a company and the value that it offers. When you look at these businesses, sometimes these businesses may be losing cash in the pursuit of growth. So their balance sheets look optically very different from the situation where they decide then that we do not need any more growth capital, and now we will be generating huge amount of cash. This happened in Amazon also, and this is likely to happen in some of these new age companies. I will continue to be a believer in some of these companies if the management do not mess up. And if the management mess up, I have the choice of moving out instantly. Well, at the risk of not being a SEBI registered advisor and therefore talking about my personal portfolio, I now own Paytm, I now own Nykaa, and now I own Zomato. All three stocks are in my portfolio. So I do own two companies, and I make a distinction in my mind, having read on biases and if we keep talking about biases of every single kind, then you make a bias which is, I don't own anything that I believe to be of an extraordinarily high valuation. But there are two companies there that I believe are mispriced, which is one is in Ambuja Cement and the second is Adani Port. The reason for that are, one, of course, that they have a lot of institutional holding to begin with, and therefore the allegations of concentration in the hands of few is not apt in those cases. Secondly, there are real assets. One of them was acquired by a bidding process where there were other competitive bidders. And given the fact that that asset can easily be passed on to another party today, they were at 380 rupees, there were bids that were coming in, is very easy to decipher. And thirdly, the valuation of cement is done based upon the tonnage and how much of efficiency you are able to bring in. It's not such a rocket science business. So I do believe that the asset value that exists in that company is very different from the situation that exists in some of the other companies. Now, with Adani Port, the logic is also similar, which is first, the institutions own it. Secondly, it's a fact that it is a monopoly in the port business in India. Now, as Nikunj was talking, if you're long-term bullish on India, you're also long-term bullish on the trade prospects of India and whatever happens at the ports. And then you look at the substitution value of these ports and say, if I was to acquire these ports or if I was to recreate these ports, where do I get the locations? Where do I get the licenses? Where do I get the infrastructure? And you come and say, you know what, appears to be an opportunity. And also you're buying at a very different price. I was not an investor in these until a few days back. The market brought them down to a level that forced me to become an investor.
Well, that was Safir Anand saying that he owns two Adani companies, Adani Ports and Ambuja Cements. Now, another company that was under a lot of pressure was LIC since the Hindenburg report came out on the Adani Group stocks, of course. Now, LIC's chairman speaks to ET Now's managing editor to clarify that insurers' exposure to the group. Listen in to what he had to say.
So, on the book value, total debt and equity exposure on the book value is less than 1% of the AUM. I think we have already stated this earlier also.
Can you be specific, sir, here? It is less than 1% of AUM, but what is debt and what is equity?
On the book value of total 33,000 crores or not, the debt is around 6,000 crores.
Is LIC in your debt book still in standard account?
Yeah, they are standard assets. The debt part is standard.
Now, I do understand that the total investment in Adani group of companies is still above the book value and you've not lost any principal amount. But there is a loss in the total investment kitty of LIC. So, what will change for policyholders?
Policyholders will not be impacted at all. There's no way they'll be impacted because we are going to do the valuation on all the policies, old policies, before we come out with a decision to declare bonus at the end of the year. So I don't see any impact for policyholders. I would like to reassure them through your channel that they have nothing to worry about, neither the policyholders nor the shareholders.
Well, that was the LIC chairman, of course, trying to allay any fears with regard to the Adani Group stocks that they have an exposure to. But quickly moving on, Prime Minister Narendra Modi will inaugurate the 14th edition of Aero India today in Bengaluru. The event is scheduled to be held for 5 days. Participants from 809 companies are going to take part in showcasing the country's aerospace and defense capabilities. And India witnessed a historic win against Pakistan by 7 wickets in the Women T20 World Cup Round B. This historic win was guided by Jamima Rodriguez and Richa Ghosh.
And Ramesh Bais has been appointed as the new governor of Maharashtra. This comes as Bhagat Singh Koshyari resigned after his latest controversial statement on Chhatrapati Shivaji Maharaj. Ramesh Bais previously served as the governor of Jharkhand. And Prime Minister Narendra Modi recently inaugurated the Sohna Dausa stretch, which is the part of Delhi-Mumbai Expressway. The 246-kilometer stretch will benefit people traveling from Delhi to Rajasthan's capital Jaipur, who will now have an alternate and shorter route where travel time will be reduced by over an hour. And the Drugs Controller General of India has issued show-cause notices to e-commerce giants Amazon, Flipkart Health Plus and 20 other online sellers for selling drugs online without a license.
But with that, we're completely out of time on this edition of The Market, of course. Market Cafe, I apologize, of course. The Market will take the action forward. From Ankita, myself and the whole team that puts the show together. Thanks for watching.